at the cost to heat homes, power trucks, run machinery. Everything diesel does is becoming a bigger problem for many Americans and companies. And one of your next guests says the higher prices could lead to a $100 billion hit just to the U.S. economy. Overseas in Europe, things are just as bad, if not worse. Digging deeper to all sides, Mark Finley is an energy fellow at Rice University's Baker Institute of Public Policy. He just ran the numbers, along with somebody who needs no introduction, but I'm legally obliged to give her one anyway. That is CNBC contributor Helima Croft, head of global commodities at RBC Capital Markets. We're going to make you laugh in a serious story, Helima. Good to see you again. Mark, you ran the numbers. Tell us what you found, because we implied there was a shortage a couple weeks ago and kind of got a nasty gram for the Department of Energy. There is a real issue here.
There is a real issue. Inventories for this time of year are the lowest they've been in memory. And of course, there may not be physical shortages, but that's because the price has gone up so dramatically. And so, whether you trade off physical availability for a higher price, the impact is still the same. And as you mentioned, it's looking at U.S. Consumers footing a bill for an extra $100 billion this year just for diesel fuel.
That's it, Helima, and we're competing in New England. I don't know if you're up there in Rhode Island or you travel every day, so who knows where you are. If you have heating oil, I'm sorry. What's going on?
I mean, this is a huge challenge, particularly for the East Coast of the United States. I mean, it's where all the products are in really short supply, and this is going to be a big challenge when we go to the European sanctions. In February, Europe is going to basically go to zero in terms of imports of Russian products. So you now have Europe essentially bidding against the U.S. East Coast for refined products. And if we have a very cold winter, this competition could send prices much higher. And so this will be a really pronounced problem come winter. And again, it's a problem of competition right now between the U.S. East Coast and Europe for the refined products.
Back to you, Helima. Before we go back to Mark, do you think we could get a ban, temporary or whatever, on refined products like diesel from the United States being bandied about? In other words, you can't ship from Houston to Rotterdam.
I mean, right now, the U.S. Energy Secretary is talking about sort of minimum inventory levels for the East Coast. But the question is, do we go further in terms of refined products ban? I mean, you have certain members of Congress calling for this now. The real problem would be what this would do to Europe. Again, Europe has taken a very serious stand in terms of willingness to shut down the market for Russian products into that continent. And if we basically ban U.S. exports, that's going to put our key allies in a very, very serious economic crisis.
That's it, because they need this sort of gas to oil and diesel switching that we've talked about. And Mark, from an economic perspective, diesel, we don't even think about it unless you're a trucker or a train, whatever. It is so critical. I mean, anecdotally, I just got some tree work done. My tree guy, who's a great guy, tacked on a surcharge for the cost of his diesel for his trucks. He apologized, but I totally understand, especially covering the industry like I do. Talk to us about the ripple impacts, not just if we don't have diesel. We'll probably have it, but man, the extra cost on everything.
That's exactly right. It's literally the extra cost of everything that moves is moved with diesel fuel. And we're staying at home. So maybe, gasoline has been a huge issue already. We saw how big it was in the midterm elections. With more people staying home, everyone is ordering. And so, the need for stuff to get moved around, is, if anything, even greater than it was before. And literally, diesel is all in all of that.
And Mark, one more to you. What is the reason for this? Is it only the war in Ukraine? I mean, that's what we hear, but is that the only reason?
In normal times, the only thing you need to worry about when you're thinking about what drives changes in prices of diesel fuel and gasoline is what's changing with the price of crude oil. This is not normal times. There are a variety of factors. As Helima mentioned, and hi, Helima, Russia is a significant exporter of not only crude oil, but of diesel fuel as well. Earlier this year, China put export restrictions on its refineries. But also we've seen, in addition to the strong demand that you mentioned earlier, Brian, it's the number of refineries have closed in the U.S. and in Europe after the pandemic. So refining has been tight. And on top of that, you have the Russia and the China stories ladling in on it.
That's it. Helima, listen, we've obviously got the war. No one's minimizing that. It's played a tremendous and terrible impact and probably will even more so next year than this year. But when we're down by 50% from our refining capacity in the Northeast and New England from 10 years ago, what do we expect is going to happen?
One of the things that we should be really concerned about is, there is no SPR for refining capacity. And so what are the tools that policymakers have to alleviate these shortages? And if we go into a really, really cold winter, that's going to have huge impacts for consumers, particularly sitting in places like I am in Rhode Island.
That's it. And apparently you guys used to work together. So it's good to have you back on as well. It was a good pairing. Mark and Helima, thank you very much. By the way, Helima, I'll see you in Vienna. Guys, thank you. Have a great Thanksgiving.